What's going on? Welcome to the Max Options course on the Max Way. So I asked my Discord a while back, what kind of videos do they want? I don't even know how far back it is, but they voted, and I told them I'd have this class out last week, but I was slacking. I went to Mexico instead. I just do my thing. So I'm going to make this video. So basically what I'm going to cover is, once again, how I sell covered calls and use that passive income to trade, and a little bit of how I choose my spreads using my credit spread strategy that I wrote up. And that's what I'm going to go over today. Basically, how you can play safe, secure, and guarantee you make money on any account size. And if you don't believe me, I'm gonna fucking show you, because I did it today on 3 different account sizes. So today, let's start on the small account. So if you take a look here, you'll notice this small account is not up something dramatic. All right, it's a small account. It started with about 4,000 bucks. So we're up 9.5%. This is only about 2 months ago. So I got 1,500 shares of SNDL, some other little stocks. The stocks don't matter. You can see the portfolio is up, holding a little bit of cash, SOS, Workhorse, FCell. So a little diverse there, a little bit of tech, a little bit of EV, a little bit of whatever. The whole purpose is you don't need a lot of equity to do this. You can roll out covered calls on any account size. You can see here, I'm selling 1 covered call on fuel cell for 28 bucks. Then I'm going to go over to my next one, Workhorse. You can see 1392 is my average. I like to do monthlies. Monthlies are stress-free for me. Like set it, forget it. If the shit's up in a month, if it's not, who cares? So on this one, I'm going to choose the 15. I'm going to sell it. All right. That one, we're going to get $142. $142 on a $4,300 account is like 2% gains on one little play there. That's magnificent. Right, that's what we're looking for. SOS, we got 2 of those. We're another 24 in. We're just under $200 now. That's a little bit less than 5% gains for the month. And we haven't even done SNDL. SNDL is carrying an $8 per. We got a bunch of those. So we're at 15. Another 120. Now, if you do the math, we're at about 300, 310. That's about $150 short of 10% account gains for the month. And these are realized gains. That's the most important thing to remember. We're not using unrealized losses. We're not using equity that's not ours. These are realized gains. As soon as these sell, you can see here that I rolled over some of the profits and bought another $200 of SNDL, or 200 shares, because we want to grow. And the more we grow, the more we can sell, the more money we're going to make in the long run. So I'm going to sell that 17 for 136. That's going to push us to around $320, $330 for the month. So once those sell, this is what it's going to look like on your small account. You're going to have your stock and you're going to have your option, and that's it. On a small account, guess what? Look, you're done for the month. When the other ones fill, they fill. For the sake of this video, I believe I go through and I replace the order here. And I go down 1 penny just so they fill for everyone. And then you can see here how quick, bang, how quick contracts fill when you just change it $1, $1. Don't let a trade go to shit because you're too arrogant to replace the order for $1 less. And I prove it here. Go back in the system and change it for $1. So on this little $4,000 account, I just showed you how you can make about 8% account gains a month. Now, if you do the math correctly, if you just do covered calls and nothing else, all right, on a $4,000 account plus 8%, let's do some math, plus 8%, that's 320. After 3 months, you'll be well over $5,000 already. And just ignore that text message. This was my friend's phone. Obviously, I don't have 2 Robinhood accounts. And her boo thing was hitting her up, all right? So let her boo thing hit her up. This is it. This is how simple it is. I changed everything here because I wanted to show you guys on the small account what it looks like when everything is exercised. And that's it. This is what it looks like. You can see I kept buying more SNDL because I want to get more passive income. We're up to $140 a month just with that little baby amount of 18 shares. multiply that by 5 in the future, and boom, I'm up 285, 60. I'm making 700 extra a month cash. You can do whatever you want with it. You can reinvest it like I showed you here. You can put 30% away for taxes every time you do this, and then the other 70% you could reinvest, pay yourself half, do whatever the fuck you want. It's just the beauty of it. So you can see we have cashed out, we have secured our covered calls, and we're going to let them ride. At the end of the month, I don't even look at these on the small account. It's either exercised and I made more money, or it didn't exercise and I just sell them for next month. That's how it's done on a small account. That's how you can do it and continuously do it without any issues on a small account for the long run. On my medium-sized account here, you can see that I have about $19,000. The open PL is negative 2,500, down 9%. But we don't give a shit about unrealized losses. I keep preaching that. I want to pause it here because I want you to see that I already did Riot before I realized, oh, fuck, I got to hit record. So Riot's covered call is completely done. I have 300 shares of Riot at an average price of $37.29, but the stock's average price is actually $39.67. So I sold the $40 call because I don't care if I sell Riot. I want to get the best premium on the small account. So if you notice, I sold the $40 call at the end of the month, and I got $753 of premium there. $753 is 7.5% gains on that one. That is huge. And that's about half my account in that one stock. So 7.5% gains translates to 3.75% gains of realized gains on the whole account on one stock. That's massive for the month. So I enjoy that. And I'm going to let this ride now, this video. I want to show you how I do it on Webull. This is the Webull app. The first one was Robinhood. I'm going to show you how I do covered calls on Webull now on my small account, which is a 5-figure account. So I took you from a 4-figure account with a little mini portfolio to show you how you could do it to a 5-figure account with a very similar portfolio to show you how you can build and grow using the covered call method. If you look there, you'll see my year. I had a strong dip once Riot tanked, but this is my realized P&L for the year. Look at this. I've only been doing this for about 5 months now. Look at my realized PL, all green. The proof is in the fucking pudding, people. Look at this, all green. Because if you just sell the contracts, if it expires, did you hear my accent there? What the fuck was that? If you just sell the contracts at the end of the month and they don't exercise, they expire worthless, you just keep selling them and you just keep making profit. If they do exercise, you just make a little bit extra coin, then you have some cash to buy more. You can see here, I got $8,000 buying value. I got $2,000 ready to go because last month some shit exercised. So I'm going to buy a little bit more SOS because I'm like OCD, 1,900 shares is cool, but it doesn't look as clean as 2,000 shares. And that's the only reason I'm buying 100 shares here, to be honest with you. Plus, I'm reinvesting some of the profits. So I'm going to buy, set an order to fill for SOS. I'm probably going to go back in there and change it just so I can buy it. I'm going to look at SNDL. I got 1,500 shares. I believe I exercised 1,500 shares last month, and that was where some of the profit came from. I also got rid of Workhorse, which I had a sweet average on this account of like 11 something, but I did sell at that $15 mark. So lost Workhorse, no problem, straight gains. And then I'm going to show you here, boom, just like that. I just bought 2,000 shares of SNDL, reinvested some of those profits right back into stocks that I love doing the covered call strategy on. And I'm going to get back in there and sell some covered calls. So there's the orders right there. So I'm going to go back in there and cancel that SOS order. I'm going to go back in there and I'm going to fill it. So I'm going to bet just a penny less. Remember, I said, if you're going to get shit done, right there, 1 penny, ready? Bang. Look at that. Filled immediately. Don't let a penny or a fucking dollar ruin everything. Just get it done. It's $1. It's a penny. If you're penny pinching and you're trading options on the stock market, you are fucking wrong, my friend. You are wrong. Save that shit for your light bill. Save that shit for your gas bill or your spending when you're going to the grocery store with your miserable wife or husband. We don't do that here, all right? You get shit done. We're doers. So now you can see that I just sold some stock for SOS. Let me pause this real quick. It looks just like Riot. SOS, my stock is down significantly, 20%. So the premiums aren't that good, but you could see that I still got 230 bucks off of 5,000 or off of 6,060, leaving me with 5,830 bucks of unrealized equity there. That's great. That is fantastic. I love the fact that I could do that. 10%, 5%. So it's about 3.5%, no problem. But I'm doing that month over month on this stock. And I want it to come back and sell. So I will sit here and I will sell and buy more SOS until this motherfucker realizes one day. And guess what? When it does, I get my 1615 back plus that 200 every single month over month until it happens. I'm going to wind up making $3, $4, $5, maybe $10,000 on this one stock. All right. Set it and forget it. We're not in love with these bitches. I don't care about this underlying stock. What you want to do is set it and forget it. Pretend it doesn't exist. Come back every month and do the same thing. I'm showing you in this video. It only takes a couple minutes on your brokerage. Like, I'm a little bit more proficient with my brokerages, so it takes me less time. But once you get to this, right here, I showed you that you can do it with 300. So if you had 300 or 30,000 shares of SNDL, look at that. That's $2,100 for the month. Boom. 2,100, all yours. And all you need is 30 grand. So maybe once I get to 30 grand, I'll just sell everything and buy 30,000 shares of SNDL, and I'll make 2,100 a month. I'll make $24,000, 25,200 to be exact, in this account just on SNDL. And who knows, one day if it rips back to $1, I get that intrinsic value between 89 cents and $1 as well. Make a little bit of extra coin, right? We're going to keep selling. We're going to keep making that money. We're going to keep the covered call strategy. So for this account, I've done nothing but covered calls, and I'm going to continue to do nothing but covered calls. So this is what it looks like now. It's fully done. Ignore the open PL, the unrealized gains. Remember, this is what we're looking for right here. Bam. Realize. That word is significantly stronger than unrealized. All right. Unrealized is imaginary. In stocks, you don't realize shit until you sell it. So if we keep selling those premiums, look at this. Workhorse, Fuel Cell, SNDL. Fuel Cell was down significantly for me before I sold, but it wind up coming back and I wind up getting that exercised contract. I don't give a shit. Look, SOS, remember I just told you, is down 20%. So the premiums aren't as strong as they were when I first got in, but I'm still up 960 bucks. That's 1/6 of what I paid for. So all I have to do is do this for 5/6 more length of time, and all those stocks will be free. If this number hits 6 grand and I still haven't exercised those contracts, then there's no more risk involved. Then that's 6 grand fucking profit. Keep going. Set it and forget it. Do this on your small accounts. Or I can now take that number, 3,000. Let's go back to that. Or I can go back and say, you know what? I have $3,932.92 that I can play naked options on. Let me throw some calls or puts out there. Let me try and gamble a little bit. Let me get some money going. Let me do a credit spread. Let me play an earnings report. Let me buy some cryptocurrency. Let me play an over-the-counter penny stock. Do whatever the fuck you want. But if you never go over $3,932.92, I do recommend putting 30% away for taxes, but that's just me. If you never go over that number, guess what? You haven't risked any of your equity yet, because you are selling covered calls. So this money is some schmo. He paid you that premium to buy that contract off you. So that's a realized gain. So you're taking a realized gain and putting it back out there, trying to compound profits. Nothing is wrong with that at all, as long as you have discipline and risk management and you stay below that fucking number. If you stay below that number, you're good to go. That's it. So this is what my account looks like. I'm not going to look at this small account until the end of the month. Even with the buying power, even with the extra cash, I don't care. I'm going to let it sit just like that. It's a good account. It's on a consistent growth pattern. And right now I'm only just under 4 grand up since March. It's July, so 4 months. So by the end of the year, after the next 6 months with the compounding gains, I'm going to be up 10 grand or probably 33% in this one account. How awesome is that? So that's how you would do it on a 5-figure account, just like this. And the growth is nice. I haven't taken any money off that account yet, but maybe I will. So here's my big account. Here's some Tesla puts here. Oh, this is actually what I want to show you guys after. Let me back this up real quick. This is the third video. Let me go to my downloads real quick. Here's my covered call tracker. Actually, this is credit spread guide. Let me go to, this is the small account again. I took a video of my big account. Maybe I didn't send it here. Here it is. Okay, we're in business. So here's my big account. So today we opened up just a little green. It wound up red. No problem. We're not here to talk about that. So here I want to show you, bang. These are all my shares on my big account. Very volatile. A lot of crypto, almost all pot in crypto, energy, Fastly, Tilray. I had about 12 more stocks, but guess what? They all exercised. So I took the profits off them already. This is what's left. So I'm going to show you guys that these percentages, I don't fucking care that they're down 38, 40%, 5, 10. They're all down, every one of them. Not one of them is up. Hopefully in the future, I get to show you guys what to do with the strategy when it's up. I would just say go 10% up and secure more intrinsic value as you can. The premiums don't matter at that point if the shares are up. So I'm going to show you guys how I do it on a six-figure account, even though, I mean, yes, it's 98,000, but you get the idea. This is a six-figure account. This one's down 1,100. My average cost is 3,172. So not too far away on Mara for 3,172. I want to get a little bit of intrinsic value. I make sure I go to the sell at the top so I don't buy any naked calls. That little flashback right there, I'm going to be honest with you, that's me forgetting what my average cost was because I'm doing 10 things at once. So I think I wind up choosing the 33 on this one to sell covered calls on. I have 1,000 shares, so I do get to sell 10 contracts. So it's really just how much premium do I want to make here? I could have sold the 31 and took $3,000. But I want to choose one that's going to get me a little bit of intrinsic value, never below. So I wind up going for the 34 here for $2,000. So I'm gonna throw the 34 out. I'm gonna take 2,000. So just like that, bang. Only one of my underlying assets just produced me $2,000 in passive income, which is just about, what was it, about 6-7%. And the order doesn't fill immediately, which is fine because I got a lot of shit to sell on this account anyway. As you can see, Mara looks like it's downtrending pretty heavily like the rest of these growth stocks as well. Come on down to SOS. SOS, you can see was in all my accounts. I like these cheap stocks. These cheap ones usually provide good ROIs on the premiums. This one's only 70 bucks. 70 bucks, I'm completely cool with it. I got to sell a $5 on that one, right? Look at fuel cell. I got to go all the way the fuck up to the 14. Some of them, you can't go back all the way up. So I got to go all the way to the 1350 because once you start getting a little bit of premium in, your cost basis is lower. Once your cost basis is lower, you can take a little bit more risk and sell. Let me back up here. Sorry, I lost my train of thought. I want you guys to see how many shares I have on SNDL on the bigger account. 25,000 at $1.06. I've had these since January. I've been doing this since January. I have made well over $25,000 on SNDL already. SNDL has paid for itself. So I'm going to check the premiums on this one because it's the cheapest one. So sometimes you get some better premiums on the weeklies, but this obviously you didn't on this one. Another 2,250 in the pot. So what you've seen already, I'm just under $5,000 in passive income. $5,000, that's $60,000 a year, just with the ones that I've sold already. Then we come to Riot. We got a little room for Riot profit, another 2,580. So right there, that pushes me around 7,200. I'm at 7,200 for the month right there. Fastly looks good. Nice green candle there, which is what you want on covered call day. I got to go above my average price. So I'm going to sell my my 3. There's another 600 in the pocket. If you had 1,200 shares of Fastly, look at Fastly sold immediately because if you notice the candle here, there's bullish buying pressure. So when we're selling covered calls, if there's a very bullish uptrend or an aggressive buying pressure, your contracts will sell immediately, no matter what. That's because you're selling them. I'm selling the $62 calls at $2.07. And as soon as they sold, the price went up to $2.15. And now you got buyers coming in at $2.15. So mine gets snatched up almost immediately. That's the ideal way to sell these, like Tilray here. Tilray is probably going to sell quicker than not because of that bullish buying pressure. Unfortunately, I can't go that high on Tilray because I got to go way out of the money because my average is shit. But this is what I was telling you. Don't jeopardize your average because you think, oh, I want to make more premium. The premium doesn't matter. Getting out of the trade with profit matters. So you could see here, I'm down 25%. So I had to go all the way to the $24 strike price, right? But I'm not going to risk $22, $21 strike price and lose money on 500 shares. That's fucking stupid. I'm going to go to the $24 strike price. If Tilray has a crazy month and it blasts all the way up to 24, 25 bucks, I'm going to get my $3,000 back. Then I'm going to keep my premium. And that little bit of intrinsic value between 23 to 24. And that is where I make my most money, is when it comes back. When they're down and they come back. So now I get premium, previous premiums, and I get my $3,000 back, and I get the additional 78 cents or $1.78 per 500 shares. So if I sold just the $24 call there at 78 cents times 500, I mean, that's an extra 390 bucks. So what? You make 1,000, 2,000 bucks, do this month over month, you're gonna make crazy amounts of coin. Can it be growth? I gotta go way out of the fucking money. And I think I show you guys how I jeopardize on this one. So I have to go to the 34. It's a dead option. No one's up there. There's no one buying or anything. So I got to come back down. Where do I go? Where do I go? So I go about halfway. If you're like, fuck it, I'm going to jeopardize it. I'm going to go less because there's no way it's coming back up. You can either do two things. You can either buy more shares and lower your overall average, like I'm showing you here. Oh, SNDL starting to fill. Gotta love that. So you could buy more shares, and that's going to lower your overall cost average. So if you buy more shares and lower your cost average, that 32.90 probably drops to like 30. So now I could sell the 30 for 600 shares for 5 or 6 contracts and make a little coin. So for me here, I'm just going to go to the 27 and I'm going to place an order here for 87 bucks. What you do is if you got to jeopardize, which I strongly recommend you don't do. I'm purely doing this, for example, guys, I went back in here after the fact and I took that contract away, and I'll just let CGC ride with no covered call. It's better to have no covered call than to jeopardize losses because you're like, oh, I want to make this passive income. I was just doing that for the sake of the video for you guys. And that's it. So I covered all my shares. You can see that Mara's starting to bounce back, but it still didn't fill because the limit price, let me show you guys. A lot of people don't understand this. The limit price was 202. Does everyone see that here? It's 202 right here. Well, when we go to hit replace order, now we see, look at this. It's $1.98. Even though it's starting to bounce back, the premiums have still dropped. A lot of people think that if they place an options order, it's going to fill automatically, that, oh, it doesn't fill, I'm just going to let it ride all day. Then at 4:30, they get a little fucking message that says, hey, your contract's been canceled because it didn't fill. Well, that's why, the reason why is this right here. Your limit order dropped lower or went higher, if you're on the other side, than what you place. So you simply come back in. Let me show you guys again. You hit that replace order button. You come back in and you just replace the order. Don't jeopardize $4 for something that you want to get done. I'm trying to make $2 fucking grand here. So I care about $40? Fuck no. I'm looking at the bigger picture. All right. That SND, I got only a couple of those out, but the rest of them will hopefully fill soon. So you can see, look, those are all my orders. Robinhood advised me, we got all your orders. When they start filling, they start filling. At the end of the day, they did fill. I wind up getting all fills here, and I'm ready to go for the month. Set it, forget it. You can see my buying power is at 16.7. At the beginning of the video, it was at about 15. I'm already that's just from what I sold. And when the rest hit, I believe it shot up to like 27, 28,000. So now I'm good for the month. I got my play money. I got some money I can put in my pocket. I got some reinvestment coin. I'm good to go. And this is what it looks like, just like this. So Fastly's down 150 bucks for the day. I already got 51 bucks back. I'm just protecting my underlying assets while making some passive income along the way. That's it. The only way you could really lose money is if the company goes bankrupt or delisted from the New York Stock Exchange, really. Like, they'll fuck you over. But then even then, you could still exit. And if you've made enough passive income, you're not going to take a significant loss. If it's still there, but the company's just doing dog shit, you could just buy more, average down, get more contracts, more passive income. If it's a good blue chip stock, you don't have to do this shit on a wild ass stock like I do. Remember that. You can choose AMD, Apple. If you're a baller, you could do it on fucking Google, Amazon. You could do this on safe stocks. You could do this on ones with dividends if you really don't want the shit to move. You won't make as much on the premiums. I only do it on volatility stocks because I like the premiums that come with it. So you're not going to make 7-8 grand on fucking Apple. You're not going to make 7-8 grand on like these blue chip Costco and these blue chip ones, Lowe's, Home Depot. You're not going to. It's just simply not going to happen. It's because there's not a lot of volatility there. So I like doing it on these stocks because I like getting those nice premiums, that nice ROI that comes with it. If you look at my covered call investment, my strategy here, this was what I used to have here. You can see I had about 248,000 worth of shares. And that month I was provided with a 3.8% ROI, 94.52. However, like half of this shit got exercised and I wind up making somewhere around 21 grand, 22 grand. The total, if it all exercised, would have been $29,000. And then I would have been able to buy $250,000 more worth of shares on any underlying asset I want. And I was able to drive forward. Pretty cool, right? This covered call strategy, it's on our website. So if you guys wanted to, you can go on our website and you can pick that up at any time. Let me show you this after hours video. So I wrote my own credit spread strategy. That's my covered call piece right there. I want to show you guys, that's how I do it every month, just like that. What I just showed you is everything I do every month, besides the preliminary research to what stocks I'm choosing. You can find that in my other covered call video. Right here, you can see, look, I finished a little red. My buying power is at 21,000, but I opened these 8 credit spreads on Tesla. So my buying power is up to 26,000 by the end of the day. That's how much I made on those covered calls. You can see real quick here, FCell, CGC, Fastly, you see they all filled there. The CGC, I wind up, I'm going to get rid of that. I said, don't jeopardize. Remember that. So if you look here, I took a Tesla credit spread today, up 34%, pretty cool. I like taking my passive income and I like playing with credit spreads throughout the week. I like selling premium. So I'm gonna show you guys real quick how to sell credit spreads on Robinhood. So you can see I'm messing around. Calls, puts. I want puts. So I wanted the 595 strike and the 590. So I'm going to go to the select button at the top right. That's where this is coming from. You see where it's moving? That's the select button and the cancel button now at the top right. I'm going to buy the 590 and sell the 595 to enter a credit spread. So obviously I got in at 20, whatever it was, 24, 26. What did I get in at? I got in at 26, which is now 17, so 34%. This covers your monthly membership to my Discord right here. Come on, join us, have some fun. It's a 7-day free trial. The fuck, it's free. Like, come try it. That's the credit spread. So the reason I took a Tesla credit spread with some of my little passive money there, I want to show you real quick. So let me show you real quick. Sorry, I bought an insurance agency, so I'm running that, getting ready to start that as well. Very excited about that. So if you see here, Tesla today broke down pretty massively for a gap fill. So we had a small gap fill here between about 668 and about 658. So about a $10 gap fill. Once the 9 EMA broke, there was some serious selling pressure on Tesla. I bought my credit spread around 651, 652, which was good because I thought it was going to fall to about 648. Here we got the 9 EMA, the 50 EMA, and the 100 EMA, or excuse me, the 21-day EMA, the 50 and the 100. So nice levels of support here for Tesla. We got a major support and resistance level at 635 and another one at 628. We had a huge consolidation period between there for a couple times now. So very significant levels between 600 and 630. I took the 595 because 600 is married to Tesla. It's a major, major support level. You could see 600 level was tested here several times, tested here and bounced several times, tested here and bounced several times. You get the point. So the fact that I was able to go in the money to the 595s all the way down to the $200 EMA is fantastic. Fantastic. Very safe. Very, very safe. That's one thing that I like about those credit spreads. And another thing here that a lot of people don't know is with selling, if I take you here, when you go to buy, it shows you the 2 break even percent. All right. But when you go to sell, notice that switch right there. It went from 2 break even, bang, to chance of profit. I opened this trade with Robinhood's algorithm saying that I have a 91.9% chance of profit. So what I'm doing is I'm getting rid of the unlimited gains. I'm adding a significant level of collateral to this trade, but I'm taking a 91% chance of profit. So I have 91.9% on my side that says, yes, this shit is good. It's going to wind up closing, expiring worthless. You're going to keep the whole credit. If I told you you're going to get 9 out of every 10 trades and make $200 and make $1,800, and then I told you on the 10th trade you're going to lose, but we have risk management pieces in place, so you're only going to lose probably about $600. So out of every 10 trades, you're going to make about $1,200, but you're going to take one nice loss with it. What do you say? Everyone in the fucking world would be like, hell yeah, bro, I'm still making $1,200. And that's why I do this. That's one of the main reasons. If I pull up my credit spread strategy guide, you can find this on the website as well. This is my credit spread strategy guide. I wrote this entire spread. I want to actually take it off the screen real quick because I'm not going to give you guys my shit for free. I'm already giving you guys a lot for free. All right. We'll just check out step 6 real quick. So choosing the right credit spread expiration date and strike prices. This is a standardized item in my strategy, meaning it's the same way every time. The reason I took the 695 or the 595 was because it's one below a major level of support. All right. I show this in my credit spread strategy with the Iron Condor. I go over the collateral. The collateral you pay is simply $100 per dollar of strike price difference. So for that Tesla credit spread, the collateral on this trade was $500 because the strike price between 500 and 595 is 5. We're an options traders, so it's $500. This is something that I do for all of my spreads. You base your strike prices on support and resistance levels. Your first Iron Condors or your credit spreads, you should always base those based on expiration date. So you want to look at implied volatility. According to one standard deviation in that short time, how far can that stock really move? You can use Fibonacci levels as well to help you determine that. If you chose a major level and you go outside of it, the chances are that it doesn't hit that level or it hits that level and breaks are pretty good if you have the price data with it. So that would help you choose your Condor credit spread. And I just wanted to show you guys this because you should go buy that shit because it's only $39 and it's changed hundreds of people's trading and lives. And I think it's significantly worth it. I wanted to show you guys this because my team wanted to see it. I wanted to show you guys this because I think it's the actual way you should trade. I think you should sell first and buy second. So I think you should be a seller first and then you should be a buyer second. I think that's the most important thing. There's nothing more important to me than everyone making money, having fun, working as a team, selling premiums and covered calls, making that passive income. A lot of people just don't know that you can do it this easily, or they think it's some high risk, wild, advanced strategy when it's stupid fucking easy, or they think you need 200 grand to do it. I just showed you could do it on a fucking $4,000 account, which is nothing. So don't let people tell you that there's limitations or there's risk or, oh, bro, you shouldn't do that. That's so risky. Like, go fuck yourself, dude. I've been doing this for years and months and years, and I've never worked my 9 to 5. I make 6 figures a year. I live a great, comfortable life. I don't need to run a Discord. I don't need to do anything. I do it because I truly like helping people. And I think that spreading this correct information is going to help people in the long run build wealth, and get to where they want to be. A lot of people have this picture and envisionment of where they want to be, but they truly just don't know how to get there. So hopefully we can get there together, guys. Hope you like this video. I showed you guys how to do covered calls on a 4-figure account, 5-figure account, 6-figure account. And I showed you how I take my passive income and I do credit spreads. And I showed you why I choose my strike prices and stuff. Give you a little taste of the puzzle, but not the whole thing. I hope you guys enjoy this video. So much more free educational content. If you like this video, guys, please don't forget to like and subscribe. We appreciate every fucking one of you for all your support and consistent support. And let's get back after it. And I'll make sure any new strategies or anything I come across comes right to this YouTube first.